we need to talk about a moment that just sent an absolute earthquake through the US economy. For the very first time in its more than a century-long history, a president has fired a sitting governor of the Federal Reserve.
Mark the date, August 25th, 2025. I have a feeling this is a day that's going to be in the history books for a long, long time. And the whole thing kicked off with a single post on social media.
And there it was, the announcement from President Trump. Just a direct, straight-to-the-point declaration: Federal Reserve Governor Lisa Cook has been fired. The reason given? Allegations of mortgage fraud. And with that, a political and economic firestorm was officially lit. Okay, to really get why this is such a big deal, you have to understand just how unprecedented this action is. I mean, we are in completely uncharted territory here. That's right, it has literally never happened before. The entire structure of the Federal Reserve was designed to be independent, to keep it separate from the day-to-day political grind. The idea is to let them make tough economic calls based on data, not on who's popular. This move, it challenges that core principle head-on.
All right, so what is the official reason for making such a historic move? Let's dig into the details of the accusation and, the very, very tricky legal ground that everyone is suddenly standing on.
So the accusation really boils down to this. The claim is that Governor Cook declared two different properties, one in Michigan and another in Georgia, as her primary residence within the same year. Why would someone do that? Well, allegedly to get better mortgage terms, which, if true, would be mortgage fraud. Now, this entire situation hinges on the legal justification. The law uses these two little words, for cause. A president can remove a governor for cause. But what does that actually mean? The term has never been legally defined in this context because, well, it's never come up. That ambiguity is right at the heart of this crisis. And Governor Cook's response? It was immediate, and it was defiant. She flatly refused to resign, framing this whole thing as a political maneuver and promising to fight it out in court. So, the key takeaway here is this is now officially headed for a massive, high-stakes showdown in the legal system. A political earthquake like this doesn't just happen in a bubble. The financial markets, which absolutely crave stability and predictability, had an immediate and pretty volatile reaction. First thing we saw, the US dollar, which is usually seen as a safe bet in times of trouble, actually weakened against other major currencies. And that's a clear signal of global uncertainty about the stability of America's economic leadership. And then you look at the bond market, and it was just confused. Short-term yields went down, as some investors ran for the perceived safety of government debt. But at the exact same time, long-term yields went up, signaling some deep worries about the country's future stability and maybe even inflation down the road. And no surprise here, U.S. stock futures took a hit. It wasn't a total crash, but it was a clear sign of anxiety from investors. The big question rattling around Wall Street was pretty simple. Who is actually in charge of U.S. monetary policy right now? So if we zoom out from the minute-by-minute market jitters, this event raises some really profound questions about the Fed itself. This isn't just about one governor. It's about the independence of the entire institution. So why do we even care about Fed independence? Well, think of the Fed as the referee of the economy. You want the ref to call the game based on the rules, not on which team the crowd is cheering for. That's Fed independence. It lets them make unpopular but necessary decisions, like hiking interest rates to fight inflation, for the long-term health of the economy, not for short-term political points. Immediately, critics of the move came out swinging. They argued this isn't really about the legal allegations at all, but that it's a political power grab, an attempt to bully the Fed into making decisions the administration wants, like cutting interest rates, no matter what the economic data says. So let's just recap the whole situation. What we've got is a constitutional first, a president firing a Fed governor over disputed claims. This has kicked off a legal war, it's spooked global markets, and it's thrown the very independence of our central bank into question. And that's where we are right now, right in the middle of this unfolding crisis. It really forces all of us to ask a pretty fundamental question. When the independence of an institution as critical as the Fed is put to the test like this, what is the ultimate price? What does this cost the economy, and what does it cost the country?